Hello, everybody. Welcome to this is adjusting journal entries for accounting part 12. This is a contract signed for future revenue, but we have not received any cash. So what exactly is going on here? So we have not received any cash. So when we sign the contract, generally, depending on the type of contract with no cash being exchanged, we're not going to be doing any sort of journal entry. We may make a disclosure in our financial statements, but generally when we sign the contract, we're not going to be doing any kind of entry because no cash is being exchanged. What I'm going to do though, is I'm going to go ahead and record invoices as these are being sent out. When I send out an invoice, I'm generally going to do it after services have been provided. When I receive payments, I'm going to receive the cash and then relieve the receivable that I set up previously. And then I'm going to adjust at the end of each year. It doesn't matter if we send an invoice, rather have we performed the services. So let's take a look at an example. Okay, so right over here. On August 1st, 2022, YYZ signs an agreement to provide consulting services for 1 year for LAX. LAX agrees to pay YYZ $7,000 per month during the contract term. So the contract is signed on August 1st. Do we do anything? The answer is no. And why is that? It's because there's nothing going on yet. I haven't performed, we'll say on August 1st, 22. I haven't performed any services yet. So when the contract is signed, don't have to worry about it. Over here on September 30th, I send an invoice for $14,000 at LAX. Remember, I'm doing this for YYZ. When I've done 2 months worth of work, where did this $14,000 come from? Oh, August, September, 2 months times 7,000. That's going to be 14,000. So I'm going to record consulting services revenue for 14,000. Okay, and over here, this is going to be on 9/30/22. Right, I record revenues with a credit. Now they're not paying me cash because I'm sending over an invoice, right? So what I'm going to do over here is I'm going to debit accounts receivable because they owe me the money. And this is going to be on September 30th, 2022 for 14,000. Okay, LAX pays $9,000 on October 5th. So I'm getting cash over here. The amount of cash I'm receiving is going to be $9,000. And this is going to be on 10/5/22. Now for the cash, I've debited cash because they gave me cash. Now they pay me the money. Do I credit revenue? The answer is no. This is a payment against the amount that the customer owes me. So right over here, I'm going to be crediting accounts receivable, and this is going to be on October 5th, 2022. Over here, LAX sends another invoice for $7,000. So a month past, we send out another invoice. We're going to do the same thing. On 10/31/22, I'm going to make a debit for $7,000. Over here, I am crediting this for $7,000. And this is going to be on 10/31/22. Happy Halloween. There we go. So I'm crediting this over here for $7,000 on 10/31/22. Look at transaction B, look at transaction D. Same thing, different amounts, right? So that's what I go through and do. Last one over here, LAX pays me $2,000, right? I'm YYZ, I get $2,000 cash, right? So over here, I'm going to debit cash for $2,000. Right? For every debit, I need a credit. So on 11/4/22, I'm going to come over here and my accounts receivable on 11/4/2022, I'm going to credit this for $2,000. Okay, now this customer obviously owes me money, but how much money do they actually owe me? Let's check this out. Okay, so over here, let's think about this. Assuming that we performed all services during 2022, how much should I be recognizing in revenue? So how many months did I work for? Well, I worked during the months of August, September, October, November, and December. This is going to be 1, 2, 3, 4, and 5. So I've worked 5 months at a rate of $7,000 per month. So the total amount of revenue that I should be recognizing is going to be $35,000, right? This is the amount of revenue that I should be recognizing. So when I look at this over here, though, right, I should have 35,000 in revenue, but I only have 21,000. So I have a problem, right? What am I going to need to do to get from 21 to 15? 21,000, right, plus what equals 35? So 21 plus X equals 35. X is going to be equal to 35 minus 21, or X is going to be equal to 14. So I need a credit over here to consulting services revenue for 14,000. Okay. But for every credit, I need a debit. I never touch cash. So what am I going to have to do? I'm going to have to debit accounts receivable. And this is going to be over here for 14,000. And this is going to be 12/31/22. Right? So go to the first step. How much revenue should we have recognized? How much was in there? What's my adjustment? Let's take a look at accounts receivable. With accounts receivable, over here, I've got total debits with the adjustment of 35,000. I've got total credits of 11,000. Over here, my accounts receivable is $24,000. Does that make sense? Well, let's think about it. We performed work totaling $35,000, 5 months at $7,000 per month. I was paid a total of $11,000, or $9,000 on October 5th, $2,000 on November 4th. So the amount I'm owed, or the account receivable, is going to be 35 minus 11, or 24. Remember, when you go through and do these types of problems, make sure that the assets reflect their future economic benefit. My revenues reflect what I've earned. So my adjusting journal entry, always going to be on December 31st. I'm going to go ahead and debit accounts receivable. I'm debiting this for the 14,000. That was the amount of the adjustment that I made to revenue to make this go through and work. And this is going to be to record consulting services revenue. So again, this is a tougher question. Make sure you kind of go back and take a look at it. I will see you on the next video. I want to thank you for joining me here today. If you have any questions, please feel free to please feel free to like your own questions, but please feel free to leave them below. And if there's anything you need, feel free to reach out. I look forward to seeing you on the next video. Have a great day.